Good morning, everyone. Welcome to the European crossover webinar. And we've seen a little bit of putback in indices, and I'm actually able to go in and cover a short that I had in the NASDAQ. And the reason I wanted to go on and mention that, because it's interesting in the sense that, and I just covered it. Um, One of the reasons that I would not have stayed short, actually, when I looked at we saw the close yesterday, and a couple of reasons why. I guess I could also reference probably more so even the, the S&Ps, which is why this sucker got pushed so far. And actually, it looks like we went right to resistance, which we had our bias chart resistance for today. I think it had 42.25. I'll have to take a look. Let me go to that just quickly. I thought it was, and the reason I'm sharing that because I thought it was important for a couple of reasons. Um, so you can see here, it looks like we made it all the way up to, I think I had a 25 for the day, and you can see where it went to. And I was looking at the levels as where it could go. It was 42.26. I'll have to check with my thing, but look, see right there. Maybe I did put to 42.26. Oh, we'll take a look. I'll have it on the thing. But anyway, we'd pushed so far. We'd come so far. Um, if you remember back on Friday, I was stating if we got below 41.55, we'd make a quick run to 41.42 with a pause of 41.48. We actually did it on Friday. And then I said we were looking for a move down to 41.22. And he said 41.22 with potentially an eventual move eventually at 41.04. Well, we came pretty close to 41.22. Um, we got down to 41.27 before we got this Herculean run, which was just absolutely bananas. And this is pretty huge. I mean, I thought the most we could maybe get out of this maybe would be 41.83. I think 41.83, no, 41.74 was our buy chart resistance. But I thought, as it came in the morning, that I doubt we could get past 41.83. And not only did we get past that, we got past 41.98. We weren't even pulling back and so forth. And but now to look at where I was in with the Nasdaq, I wanted to go and share that. When we took off here, it was key, and I remember referencing this was this. We got this zone here, and this was late in the day between 41.25 and 41.41, and I was stating, uh, hey, it's going to be key if we get a daily close, and you'll see where I was talking about. And you know me, I always go with the bodies, never go with the actual high. There, 41.16. So I said, if we close above that, that's going to be pretty key. And the market was higher, and then it came back before the close to dip below, but then it came right back up. And at that point, more than likely, I would have gone and covered and just said, okay, take the loss on that. And but the difference was a couple of reasons. Not only had we come so far, but not to the same extent as S&Ps. But one of the things I looked at before we went to the close, you can see here, was that, and I shared that the large traders I'd mentioned before were still had been short um, the Nasdaq, and then actually stayed short throughout this thing. And the large, very large, you can see above the dotted line, they were basically flat, but they were still above it. But the largest traders had been short and pretty much stayed short. The small trades, well, they were short in the hole, then they were buyers. I mean, that usually was going to go on and flip around. So I kind of went with that as to, what I think I would do is I go, I'll try and stick by that. And I thought, if I take a pretty good loss or take a loss, well, then I'm going to take a loss. And in the and this was another thing I thought was key, and it's why I focus so much on 2-hour charts. Um, as opposed to other charts. To me, these are my long-term charts. I don't even pay as much attention to daily charts as I do my 2-hour charts. And as I told you, I go by the bodies. So when we got above here, I'm thinking, well, as long as it doesn't get above, 41.41, then that's it. If we get a close above it, and you can see here, there we go. We pressed up against it, but we couldn't close above it. And so I actually had my stop at 41.57. I think I've been 41.57 and a quarter, 41.57 3/4, whatever the case may be. But I had there, and we came pretty close. And actually, I thought I already got stopped out, actually. And came back, and surprisingly, I wasn't. So we're sitting here, and I said, well, and I almost moved it lower. And I said, don't do that. Just go and keep it there. And I thought to myself, I should have been out because we did close on the daily above 41, 16, and should have just taken my lumps or gotten out. And I always say I don't like to hold, beyond the close. But I thought, I'm going to give this thing a chance and see, if I lose on this, okay, fine, I lose. But at least I want to see if, given going with this being as I've used this before kind of gives me a good context. And I thought to myself, the S&Ps have gotten so far, we're done. Well, the S&Ps did go even higher, and the only thing that also helped me is when the S&Ps did dip up to like 22 or something. I thought, oh God, we should have gone above 41.55, 14.155. Maybe that'll hopefully help. But we actually went to 42.26, went to even higher highs in the S&Ps, and still we couldn't take out this area. It would have sucked to have gotten stopped out and then see the thing roll over. But I was really happy about that. But I guess the more thing I was really more happy is because I wouldn't say necessarily it was a strategy, but I stuck to what I'd been using recently, which is here. I talked about this on Friday when I was on the Face webinar, and how these guys, the very large, not the very large, but the large trades, they had actually been buyers on the way down on Thursday evening, and they were buyers at, I think I said 13,860, but that thing is even a little bit higher than that, like maybe about 13,865, maybe 13,870, and they were buyers all the way down. They were buyers all the way down here, and then things flipped around. So I said, I'm just going to hang my hat on that. If I take a loss that, and to a certain extent, I should not have taken, or not have taken as much, because I should have just gone and got out. I think I can just go and live with that because at least I'll have tried this and see what happens. And it turned out to play out well, so I'm really happy about that. There are concerns here that maybe we will dip back and to come so far, although interesting that the SPUs all went all the way to 42.26, but and I think we have support today at 42.08, and that's exactly or just about where we're at. We'll take a look there. But I want to share that because to me, it was important for a couple of things. My 2-hour charts kept me, still kept me in the game when really it kept me in the game by the skin of my chin. But it was, it reinforced what I always just go by, which is the 2-hour charts, and I go by the closes, by the bodies. I don't go by the highs. And then also using that other tool with that new software that if it had not been that in regards to 2-hour charts, I would have had to bail. I would just bail, but it gave me some conviction to go and hang on to that. But anyway, you can see here with these SPUs, and I think we dipped down to our 42.08, which is actually our today's bias chart support. I think that potentially we can dip down to 41.98. But anyway, that being said, let's go and move into the analysis. Taking a look at the news. Looks like we don't have any news. Not until the U.S. session we get existing home sales at 10 a.m. Eastern, and we do get Richmond Manufacturing Index at 10 a.m. Eastern also. And we do get Eurozone consumer confidence. That'll be at 10 a.m. Eastern in the United States. Let's go move into the analysis. But I wanted to go and share that because I thought it was important for a couple of reasons. As a, I use a 2 hour chart. It's my long term chart. I'll go and pull up a daily, but for the most part, I just pay it. I treat this as my long term, and it gives me a better, as opposed to 4 hour charts. Some of y'all might use 4 hour charts. Everybody has their own way of doing things. But if you use a 2 hour chart, the way I look at it, in a 4 hour chart, how many 4 hour bars is there going to be in a 24-hour day? 6 bars. But in a 2 hour chart, you're going to have 12 bars. So you have a better opportunity to see if something's happening, and you're seeing that here. But let's go and move into the euro now. As glad as I was not to get whacked on that trade, and I certainly could have got whacked, it made me glad because I was able to, the one thing I've been focusing on, that one tool, it ended up coming through. And then also I'm a little glad that my 2 hour charts, even though I probably should have gotten out of it based on my daily, I wouldn't say necessarily kept me in the trade, but they did keep me in the trade, but it kept me from, I said, okay, well, if it doesn't get beyond this, on a close beyond that, took out the area, as long as they didn't get up on a close, and that kept me in shape. So it just reinforces my idea of just using 2 hour charts. And then, of course, like I said, using that tool and just try to put confidence in that tool. But nothing's 100%. That's what I'm saying. It could just been like, okay, I got taken out and that just didn't come through. But anyway, let's go on to the euro. Pulling up the bias chart. Okay, great. So the euro rebounded on Monday. You can see that right here, closing above 119. Resistance for Tuesday will be 1964 with support at 1881. 1964, 1881. And right there, you can see where we're coming up with that body there. And once again, you know me, I like to go with the bodies. So 1964 and 1881. On the support, I went with a 2 hour chart. Actually, we went with it. And actually, this is the one time you can see here that because we had such a big move. We went with the wick. You see, here's this wick, and there's that wick, and it gives 1881 right there. One of the few times I go with the wick. Usually, if there's a big move like that, then I can go with the wick. Let's go and switch this back to a daily, and we'll go to the cable. Cable posted a strong recovery on Monday, closing above Thursday's close. You can see here's Friday. Here's Thursday. So close above Thursday's close. Resistance for Tuesday will be 39.64. We're not getting too much juice on this. We're supported 38.55. So relatively quiet session here. 38.55. and then 39.64. Onto the Aussie dollar. So the Aussie posted a slight recovery bounce on Monday. Resistance for Tuesday will be 75.68 with support at 74.93. Let's go 74.93. And 75.68. And I went to a 2-hour chart once again to find that support. I guess I should open this up a little bit, make it easier to read. And there we go. What with the bottom right there? You see that? 74.93. It's a little bit close, but that was from where we were. But to me, that was made the most sense right there. We're pretty oversold. We'll see what happens. Let's go move into the dollar yen. So the dollar yen dipped on Monday toward a weekly level 957. You can see that right here. We didn't get there, but I'm saying we dipped towards that area, that key weekly level. Before recovering to close above resistance, which was 1027. Resistance on Tuesday will be 1066 with support of 1001. 1066. And that's not too much higher right there. I think we had 1066 before, like on a weekly level, but I remember referencing that. But anyway, 1066. And on the pullback, see that body right there? So I want 1001. Onto the cash dollar index. Now the cash dollar index retreated on Monday, closing at 91.86. Support remains 91.66 with resistance at 92.30. So 91.66 going to keep that. Only difference is this goes down to 92.30. And same thing here. We just went with a body there. Let's go now move on to Bitcoin. So Bitcoin closed for another new recent low on Monday. Support for Tuesday will be 29,800 with an expected test of 27,000. An eventual move to 24,000 remains in the offing. Resistance will be 35,400. So you can see here, we just keep on sliding back here. And I mentioned that got quite a few people that have been in the hole on this thing. Boy, they really thought that the next thing was going to move. I myself kept thinking we were just going to run out of gas and roll back down the hill. But when we got above 40,000, you can see here, we got above that 39,270 and then got above 40,000. I'm like, well, okay, well, then potentially this thing could open up a move to 46,000. And I think a lot of people were looking for a much bigger move than that. I think they were looking for 50. I know one key person was looking for a 50% pullback. Let me see where that would have gone. Just out of curiosity. Boy, quite a few people got into this thing. Yeah, they're looking for a move into 47,400. That'd have been the 50% back. But it certainly looks like we're going to go and press that. So I'm going with 29,800. With the thought, hey, look, it's just going to press lower. And actually, I think it's not. It's 20. Yeah, 29,800 is where it goes. So go with this. But I think that's just on the way. I think we're going to 27,000. Then we might get a bounce. That's where I thought we were going to go to before. Then we'd get a bounce, and then we pull back and then go somewhere in the 24,000 area. Let's say 24,700, 24,200, something like that. And on the upside, I've got resistance at 35,400, which to me just seems a bit stretchy, but we'll see what happens. Now let's go move into the S&Ps. So the S&P staged an unbelievable rally at 92 handles. Actually, the high was 42.26. So holy smokes, this thing staged a move of 99 handles off the low. 92 handles from the low of 41.27. Resistance is going to be 42.26. Well, pretty good then, I guess. Once again, I just went with the levels. And you know me, always running in resistance support through the bodies, and you can see that there. So 42.26. It's just amazing that we've made that kind of a run. To me, I thought the run was so extreme that I wouldn't even have expected. I'm not even surprised he made it 42.26. I would have expected us to run out of gas. Okay, they squeeze a little bit, and then they come back and dip. So I can't believe they ate all the way to 42.26. But I mean, you got to go. To me, I think you got to step back and pick some people up at the train station. So I would look eventually for a move down here to this 41.98 to test that. Maybe get down to about 41.96-ish. So we shall see. So resistance is going to be 42.26 with support at 42.08. So there's the 42.08. And let's go with 41.96. 42.08. Let's go move on to NASDAQ. And you can see the move that NASDAQ posted. And here's another thing that I was looking at yesterday when late in the day when I was short. I've seen this happen so many times. Nasdaq comes back with these candles on a 2-hour chart, and honestly, I've never seen it fail. It always takes the move higher. You see what I'm saying? Could have gone even much higher, but I mean, look, we're right. We just hit all-time highs last week. But I mean, fortunately we ran out of gas. Looks like our missus getting stopped out by about maybe 4 handles or something like that. But anyway, I think there's a potential we can still dip, but it would be key right now there, which is going to be 14,056. So let's mark this off. And let's see here. So support, I'm going to go right there with these 2 wicks there. And it's going to be 14,046. Not saying we can't break even lower, but on a pullback, that one's going to be key there. And on the upside, we're going to go with the bodies there, right there, and it's going to be 14,134. And let's now go to gold. We're on the 2-hour chart. So gold closed higher on Monday above 1780. The metal needs 2 consecutive daily closes above 1816 to put in a bottom. Resistance on Tuesday will be 1794, followed by 1807. Support will be 1774, and looks like we're getting there. And resistance will be 1794. We need 2 daily closes above 1816 to put in a bottom. Take a look here. I have to go into the daily, but I've got 1816. For starters, we need to deal with that 1812. But on the 2-hour chart, 1824. But 1816 will get us a look here. That's what I'm calling it. See, 1816. 2 daily closes above that will have a bottom in place. Now, let's go to crude. I can't even believe crude just kept on going higher and higher and higher. Crude closed at another new high. Monthly resistance is at 74.50, which will be resistance. I'm not even playing around with this thing any further. Playing around with like, okay, we're going to pop. Look, you know what? And we're not even that far away. Look, at there you're talking about what, a buck. So I don't care if it stays here and sits here till the next 3 weeks. That's going to be resistance. Which I remember looking. We looked at a monthly chart, and previously, like about a week and a half ago or so, I'm thinking, well, I don't think you get up there, but there it is, and that's going to be. That's going to be resistance. My dad used to say, they used to say in the old days, and that's all she wrote. And support will be 72.61. And that's what we're coming up with the support there. See, 72.61, which looks like we already tagged it. Take a look at the profile. But we already saw the 41.98. But if you look at this, 42.03 is gonna. You've got the point of control, 4,200 there. If we look at full session, I mean a regular session, the so yesterday's, oh wow, 42.07.5 is yesterday's point of control. And if you look on here, we found support at 42.06.25. And look at that. That's yesterday's point of control, 42.07. Why I say this stuff works like a magnet. And a magnet not in a magic way, magnet in the sense that that's where they'll just lean them to. And why I look at it on a, I'll look at these on a, full session profile, and then a regular trading hours, which that's what this is. So the VWAP yesterday under regular trading hours, not the point of control is 42.07.5, and they stopped just now 42.06.25. Move it back to a full session, which there's all of yesterday's. But they've got point of control from there. That was 41.99 3/4. We did put 41.96 in case they do break lower. And there's a bias chart, and I don't see that anybody has any questions. So with that, we'll call it a day. We'll get the bias chart posted in the room. And thanks for joining us here on the European Crossover webinar.